All right, we will go ahead and get started. Anyone that has any questions, please do make sure to type those into the chat box. This won't be an incredibly long webinar today. We'll hit the high points, make sure people just kind of know the good best practices to look out for coming into hurricane season, which does unfortunately start for all of us on the East Coast and the Gulf Coast of the United States here, coming up next Tuesday on June 1st, running through the end of November. So certainly not the most enjoyable time, but definitely something that we can all try to be ahead of with regard to insuring our IRA-owned properties. If you do have any questions, please do make sure you type those in to the chat box. We will certainly get to those to see if you have already filtered in. We'll get to those before we get started here in a moment, but we do need to get a few items out of the way. So with that said, let's go ahead and just make sure this is indeed being recorded. All right. If anyone would like a copy of the slides, they are attached as a handout here as well. So feel free to utilize those. If you'd like to download them, just click right there and they will be available to you. My name is Alex Perney. I've been with Advanta since 2012. If you have any questions following this presentation, feel free to give me a call or an email directly. I'm always happy to help. There's always stuff that can't always necessarily be covered in the amount of time that we have here, or there might just be something that you would like a little bit of extra clarity on. So again, always feel free to reach out to me directly. I am certainly happy to help in the best capacity that I can, or I can always refer you out to other professionals that can help you further understand maybe some questions that you might have. So feel free to reach out to me for a referral as well. An important disclaimer here, especially since we are talking about insurance, is that Advanta IRA and our employees do not provide investment advice, nor do we endorse or promote any products, especially when it comes to insurance. Make sure you are doing all of your own due diligence, asking questions, and talking to licensed professionals for this. All information and materials are for educational purposes only, and all parties are encouraged to consult with their attorneys, accountants, financial advisors before entering into any type of investment or, in this case, binding any type of insurance. If you'd like some additional information or you'd like to get a little bit deeper into a specific topic that you maybe don't feel like was covered today or any other type of topic, we hold bi-weekly events. So we hold webinars every other week for our clients and general contacts as well. We do catalog all of those in our video library, which can be looked through on our website or our YouTube channel, youtube.com/Advanta IRA. We also do keep an up-to-date blog as well. So we have a couple questions. Looks like Margaret is asking. I'll see if there's any that I can actually answer. Let's see. First couple, unfortunately, I can't give any guidance on. One question: how important is it to require tenants to pay for? Is it required tenants to pay for tenant insurance, especially for liability? That's going to be a personal preference. We'll get into some aspects of rental insurance, what that may or may not cover. It certainly is a good buffer, especially towards a homeowner policy. But as far as importance, that's really going to kind of be up to the actual investor as to determining the importance to them of having a specific type of coverage. But rental insurance can certainly be a good way to augment some of the coverages that you have, and especially when you're talking about a large amount of losses as well. Is the availability or cost of insurance affected by the storm season each year? Is it better to get November, April than in the summer months, or no effect? There can certainly be. Insurance markets are a very fluid marketplace. The insurance regulators do give insurance providers the ability to adjust cost basis throughout the year as they within a certain range. And also this year, the Florida insurance, at least here in Florida, the insurance regulator board also gave the ability for some people to be dropped off of carriers in order to bring their surpluses back into compliance, meaning the amount of money that those insurers had to pay claims back into the the correct ratios as deemed by those regulatory bodies. So yes, Margaret, there are some abilities for the cost to change. However, those are going to be regulated by certain caps. So I'd recommend that you check with the Florida Insurance Advisory Boards or your local insurance agent. They can more accurately describe what exactly any type of price fluctuations as far as binding coverage would be. And keep in mind, most of these are done on an annual binder basis, so you're not necessarily buying per month. So again, costs aren't necessarily always going to change. They do the actuarial review of these things very far out. So the Atlantic hurricane season is starting next Tuesday. NOAA, the National um, Organization of the National Oceanographic and Atmospheric Administration, for 2021 has indicated that this will be a slightly higher than average hurricane season. The Atlantic seaboard and Gulf coasts are predicted to see about 13 to 20 named storms. So that means anything from a tropical storm all the way up to a major hurricane. So 13 to 20 of those, 6 to 10 of those being classified as hurricanes. So something with a sustained wind of over, I believe, 60 miles an hour, and then it scales up from there. And then 3 to 5 major hurricanes, which are classified as category 3 to 5 hurricanes. Being in there, determining how many of those are going to make landfall is always a much harder thing to determine, but at least that's kind of what we're looking at for the season. And again, keep in mind that this is going to range everywhere from Texas all the way up to Maine. These things can slam into us. So just because it hasn't necessarily happened, especially with us in Florida last year being incredibly lucky of avoiding a direct hit from a hurricane, doesn't necessarily mean that this year is past performance is going to be indicative of what we're going to see. So making sure that your insurance is properly reviewed, up to date, that you have the coverages that you want is very important, as we'll get into in a second, especially when we're looking at a particular time of year where we are going to see potentially higher amounts of claims that maybe need to be filed and the like. Now, the types of coverage that we're going to kind of be looking at today are certainly not encompassing of all the different types of coverages out there. There are things like coverages for sinkholes, for riots, for pandemics, a lot of different things that can be you can buy insurance for. You know, an insurance company will certainly be willing to sell you insurance for a number of different things. But the types of coverage that most real estate investors, especially with self-directed IRAs, need to be cognizant of are listed up here. For those of you who might just be listening, are things like windstorm, flood, renter's insurance. If you have a occupied property that you are renting out, general liability for liability claims, and named windstorm. Now, the difference in all of these things, you may think, okay, well, I have insurance, I'm going to be covered in general from these. Well, when you are binding a policy for an IRA-owned property or an investment property, the kind of automatic defaults that you're going to be insured for might be a little bit different than what you have for your own personal home, especially if you have a mortgage against that home, because mortgage companies will require minimum insurance coverage types, especially depending on where you live, if the house is in a flood zone or not. Especially here in Florida, if you have a house that is in a FEMA flood zone, you're going to be required to carry flood insurance. It's not an automatic default that an insurance policy, especially for something that's not owner occupied, and maybe that you're buying cash, is going to include all the coverages that you might assume are there. So one of the big important notes that I would like everyone to kind of take away from this is that check what your insurance is. If you've had insurance for years, contact your insurance agent. Go over some of the points that you might have heard here today. Ask them, say, hey, if this happens, am I covered? If this happens, how much is my deductible? If this kind of thing happens, how much money am I looking to potentially be covered up to? Especially if you have a property that has increased significantly in value, you may want to look at changing coverages or updating the types of coverages that you have, because there's different ways that properties can be coverage, from things like actual cash value to replacement costs, things like that. So talking to a licensed insurance agent that can kind of go over all the things that are included in your policy is incredibly important. But let's kind of start off, the the main theme of this is hurricanes, and hurricanes are what, if nothing but humongous windstorms. So typically what an insurance policy will include is maybe coverage for something just called general windstorm. This would be something like if you have a bad thunderstorm that comes through and you have really gusty winds and you have some roof damage or a window is blown out or something. General windstorm coverage is something that is going to be it either can or can't be just generally baked into a normal homeowner's policy, but it's important to understand that that is a different type of coverage from named windstorm, and these things can actually have different deductibles. So the amount of money that you have to pay out of pocket to receive a claim check from the insurer, they can be two different things. So a windstorm, think really bad thunderstorm that rolls through your area, or some freaky windstorm that comes through and blows some stuff over. That can be a different type of coverage than named windstorm. Named windstorm, like we're talking about with the Atlantic hurricane season, is that if NOAA, the National Oceanographic Atmospheric Administration, has named a storm, if there is damage from that storm, that can be covered under a different type of coverage under your policy and can have a different deductible separately from just a general homeowner's claim. And different states are going to regulate this differently. So just like if you're looking at something like trusts or kind of a popular investment structure with IRAs, those things can be drilled down incredibly specifically between different states. And the same goes with insurance, is that every state is going to have a regulatory board for insurers in that state. So even if you maybe live in Florida and Advanta IRA is your administrator of your IRAs in Florida, but you own a property in Alabama, Louisiana, or Georgia, you may have different requirements, and you may see wildly different or may not see wildly different costs associated with your policy, because some states do allow for different rates to be applied to different types of claims, and those can scale up, and it can be something where they bake it in and then they amortize it over the 12 payment or the whole payment of the policy, or it could be something where it could be a percentage of the whole policy. So looking at these and making sure that you have that type of coverage is very important. Now, the other really important thing to look at, especially when we're talking about hurricanes, is flood or water damage. Because if your roof gets blown off and you have a humongous storm that's dumping tons of rain into a property, that is going to be looked at as a different kind of damage. A roof being pulled off might be covered under the named windstorm portion of your policy. However, water damage, per the terms of your policy, might need to be covered under a separate policy for flood or water damage. These things aren't intrinsically all just going to be covered just because you had damage to a property done by a particular storm. So again, this is where talking to your agent and really, looking through your policy to make sure that you have the correct coverages to kind of, for lack of a better term, weather these storms is very important. Because again, if you are buying a property cash and you don't have a mortgage company setting standards for the types of coverage that have to be baked in for you to close on a property, then some things might get left out, and flood is a big one. There's many different ways that water can damage a property. Obviously, if anyone here has been investing in real estate for a long enough period of time, fire and water are two of the biggest enemies and biggest expenses that can happen to a property. A renter can trash some drywall and maybe mess up a floor, but just an inch of water that floods a house can cause tens of thousands of dollars worth of damage to a property. So making sure that you have the correct type of coverages for every eventuality, especially if you have a property that's within the path of these storms, is incredibly important. Now, we had someone ask about renter's insurance, and renter's insurance is is definitely something that can help to augment all of the types of insurance that are listed up here. So renter's insurance can help be something that goes on top of something like flood, windstorm, named windstorm, general liability, but it doesn't always necessarily cover everything that you think it might. So renter's insurance is great for if you have if you require it in a lease and the renter has something happen to the property. Let's say they their car runs into the garage door, or a lot of very kind of general stuff. It can definitely help to augment that, so you're not making a claim against your homeowner's policy, which can cause coverage just to be dropped, which can cause your rates to go up. It can cause a lot of things to happen. It can definitely be a good buffer, especially with liability. It can help to really augment that type of insurance. However, renter's insurance may very well not help you too much in a named windstorm scenario where maybe you have a extremely high deductible, or the amount of money that is insured for named windstorm on your policy is well under what the actual damage to the property was, and maybe the renter's insurance has a pretty good amount of coverage, but it doesn't cover damage specific to a named windstorm. Well, then that reliance on something might have been misplaced. So I kind of keep circling back to it, is that making sure that you have the correct levels of coverage for the correct types of things that you're looking for is incredibly important here. And obviously, some things can help to buffer that, especially with renters and liability coverage. Liability coverage being, protecting you from, or your IRA in this case, from being sued in a liability action. Someone trips, falls, there's some type of, death and dismemberment, all those kind of scary things when you hear about lawsuits coming up. Liability is what that's going to fall under as far as protecting your IRA. And typically those are extremely high, much higher limits. You'll talk about liability limits that are, $1 million, maybe $2 million for as far as liability coverage. But those limits certainly are not something that's going to pay out typically in a named windstorm or a flood or something like that. So again, making sure that the types of coverage that you have are proper for what you're trying to accomplish with making sure that your property is properly insured and you have the proper coverages there as well. So why is insurance important before a storm? Obviously, making sure that you have the protection there before something bad happens. Putting on the bulletproof vest before something happens is always a good idea. But there's especially some really important things that you have to look at with regard to underwriting a new policy when you are in hurricane season. There might be more, there typically almost always is going to be some type of moratorium placed on the underwriting of a new policy if there is a named windstorm in the specific area that you're looking to have a property insured in. So if there's a hurricane, a named hurricane in the Atlantic basin, and you want to change your coverage, you may not be able to do that. They may have a 30-day moratorium placed on it. If you've at least started the binding coverage and you are closing on a new property, typically there's some provisions in there that will allow for that property to be insured, even if there is a windstorm out there and the property hasn't fully been purchased yet. But it's always very important to say, hey, sit down with your insurance agent when there isn't a storm out there with a name on it. So that way, if you need to change something with your policy, you're able to do it and able to get something that's going to not go into effect, afterwards, and they're going to say, too bad, so sad, we're not going to cover you for that. So making sure that you understand that the insurance providers won't change policies or may not write new policies when there is a pending named storm out there. So if there's just an area of investiture, or there's some type of tropical depression, you still might be able to get some things changed. That is definitely something to look at, especially before a storm actually arrives. Let's see. Okay. So incorrect policies is another thing to look at before a storm. I have seen it, I don't want to say a lot of times, and I'll kind of get into it in a moment with regards to making sure that these things in general are properly written, but incorrect policies, it's not kind of out of the realm of reason to say that insurance companies are looking to reduce their cost as much as possible, and what's really expensive will paying out claims. So don't give them an easy target to deny an otherwise valid claim for something as easy as a paperwork error. And the big thing to remember when you have property within an IRA is that it's owned by the IRA, or it's owned by the entity that the IRA owns, be it an LLC or a trust or something. So understanding that concept and making sure you extend that to everything. So if you've gone through the IRA closing, you know that the property contract has to be in the name of the IRA, the settlement statements in the name of the IRA, the deeds in the name of the IRA. So why wouldn't the insurance policy be in the name of the IRA? I have seen that happen quite often because while we don't necessarily require insurance, obviously it's a very good idea to have it. So if you as the client go out and talk to ABC Insurance Company and say, hey, I need insurance for the property at 123 Main Street. Well, if maybe this is the first time you've bought an IRA property, that little slip up of writing the coverage in your name personally could cause you a huge headache down the road if you have a claim and they come back and say, well, this policy is written in the name of you personally, John, and your property is owned by the IRA. Those are two different things. We're not going to cover you. That's something that is incredibly easy to fix from the very beginning, but you have to make sure that it's done. So again, making sure that paperwork is done from the very beginning is a real easy one to make sure that you're going to be covered if you have an issue. And something that I've seen people fall through the cracks. I've seen people send in insurance binders to have us pay the premium on, and the IRA is named nowhere on that. So we try to help them out and say, hey, let's talk to this insurance agent, let's get this thing changed so that way you're covered if something happens. And again, remembering those coverage moratoriums, you can get a binder issued for a property if it's under contract, so that way you make sure that you have, some type of coverage if something does happen. But keep in mind that, just talking with the insurance agent, these people are professionals. They know what's going on, and just making sure that you are, protecting yourself and your potential investment is important as well. But if you do currently have a property, now is the time to talk to your insurance agent. We don't have any named storms. NOAA this morning gave us a 5-day outlook forecast for the Atlantic Basin. We have no expected activity coming up in the next 5 days. So you got a long weekend, people are off, thumb through that insurance policy. It may not be the most exciting thing to do with a long weekend, but it's time well spent, especially if you do have an issue and you find something early, get it taken care of early, and make sure that you are covered in the event of a loss is incredibly important. So here's some other important items. Unless otherwise stated, homeowners policy don't cover flood or water damage from a storm. So especially when we think of one of the most catastrophic things that happen with hurricanes, it's not always wind, it's storm surge. Think about instances like Katrina or Hurricane Harvey. Hurricane Harvey that devastated Texas in 2017 had very little wind that happened, but the flooding was just catastrophic, and they're going through it again for the most part right now with low pressure systems bringing rain to that part of Texas. But making sure that if you're in an area, even if it isn't covered under a flood map, and especially with how cheap it's going to be for you to get flood insurance if you are not in a flood zone, deemed by FEMA, that is with the risk of sounding corny, cheap insurance. But getting a flood policy, I know at least personally for my house that I live in here in Florida, I'm not in a flood zone, but I went out and priced out flood policies for my house, and it was incredibly cheap because I have a good elevation certificate on my property. I'm not in a flood zone. I'm in a non-evac zone, which is incredibly surprising in this part of Florida that I live in. So getting that insurance was incredibly cheap for me. And it could be incredibly cheap for you, but could save you tens of thousands, hundreds of thousands of dollars in the event that you have, something where like a roof's blown off and your house gets filled with water from a windstorm. Understanding the difference between windstorm and named windstorm coverages is, again, incredibly important. Named windstorm meaning that you have a hurricane that has a name against it, not just your average thunderstorm that rolls through your area. Let's see. We have a couple questions. So before I get into a few of these other ones, let's go ahead and answer those. Robin asks, what if your insurance plan has your name and your LLC name on it? Do I need to remove my name? Well, that's an interesting question. So what I'm assuming that they are asking is that if the IRA owns an LLC and the LLC owns the property, then people like to call that checkbook control, who should be named as the insured on the policy. The LLC in that case should be the named insured because it's the owner of the property. Now, is having you personally as an additionally insured on that policy an issue? I wouldn't necessarily say an issue. If I were to do it, I would prefer to have the member of the LLC, which would be the IRA, named as an additionally insured. So that way, if they say, since it's a single member LLC, we're just going to write the check to the primary shareholder, then they're writing the check to the IRA directly and not you personally. Can it be is it going to cause like an issue where they're not going to cover something? No, so long as that LLC is the primary insured. But I have seen it where a client has received a check for an insurance claim that was made payable to them personally in either the IRA owning it directly or an LLC, and they've cashed it, and that has caused an innumerable amount of issues. So while, is it the best idea? Maybe not, but so long as that the titled owner of the property, in this case, if it's an LLC for this um, uh, for this, should they change it up, I would talk to the insurance agent, see what their thoughts are on it. They're the ones that have the licenses, but making sure that the titled owner is at least the primary insured is always a good idea. And I'll get into some scenarios where maybe that could be an issue here in a moment. Richard asks, I don't own physical property, but do own notes. Should I get insurance in addition to homeowner's policy from the mortgagee? That's a great question. So in this case, for anyone that's not maybe inherently familiar with what he's talking about, instead of owning the property directly, he has issued a loan to the person that bought the property. So his IRA, or he personally, is the primary lien holder. Like Bank of America would lend someone money to purchase a property, either he or his IRA is done that in this case. So should he get additional insurance on the property? Well, talk to the insurance agent, see if there's a conflicting interest with having multiple policies cover it. But I would say that making sure that the homeowner has the certain threshold minimums for insurance in that area, just like a national lender would do, is certainly not a bad idea. Really can't do anything except help you in the event of a loss where maybe that mortgagee has a significant loss against that property. Now, a lot of people like to buy personal liability umbrellas. So what a liability umbrella is, think of it as a policy of liability coverage that covers you, what you personally own, and everything else that you personally own. So it can add additional insurance to your car insurance, any investment properties that you own, other things that you do. It can offer just kind of a general blanket of liability coverage to you, and they're typically sold at pretty cheap rates. Minute amounts of pennies on the dollar versus how much you can get as far as an umbrella insurance policy goes. Most people, you buy these things in $1 million increments, and they cost several $100s per year typically to have. Now, that's good. That's cheap insurance. But one issue that I see happen a lot is that people will either inadvertently or, just it happens that they'll say, oh, well, I maybe don't need to have as much liability coverage on my IRA owned policy because I have a personal uh, umbrella policy. Well, while that's well and good, that's a personal property. That's a personal liability umbrella for personally owned assets. Your IRA is a separate entity from you. So your personal insurance can't carry over to your IRA owned asset. And I can assure you that an insurance company will look to something like that. If you make a claim against your personal uh, liability, that they are going to say, hey, again, just like with homeowners insurance, this is your personal liability umbrella. That is a IRA owned asset. These are two different things. One, let's say they inadvertently did pay it out. They could try to claw that back too if you had a liability issue, and then your IRA could be on the hook for, for repayment. There could be a lot of issues. So keep in mind that if you do have a personal liability umbrella policy, you can buy umbrella policies for IRA owned assets. So if you own multiple pieces of real estate, your IRA could buy an umbrella, but your personal umbrella cannot extend into your IRA owned assets. So just keep that in mind. And then the next one I want to say again, and I keep stressing it, talk to your insurance agent. When talking about binding coverage, talk to an agent, someone that is, although they are selling you something, they are knowledgeable about what they are selling. So talk to them to make sure you're getting the correct types of coverage, the correct limits of coverage, and everything else like that. And something that people that I've had conversations with in the past, and this was especially prevalent with the unfortunate BP oil spill, was that IRA-owned properties could absolutely make a claim to those funds that were set aside, those trust funds that were set aside for disaster relief. Now, the window for making a claim on some of those most certainly has passed on a lot of them, but you could certainly do that if there ever is some type of ecological disaster where there is a large liability, class of affected individuals. IRAs can certainly apply for that. Now, keep in mind that it needs to be done through the IRA directly. You don't personally claim it. Again, going back to the issues that I've seen, I had clients that tried to personally make claims for the BP oil spill, and they were denied because the incorrect person signed documents. There were other issues with naming and things like that. But I have seen success stories. It took me about 2 years of working through one client's property, and we were able, or the payment was able to be made for his claim against the BP oil spill and what happened. Although it took some significant amount of time, he was successful in doing that. But again, he followed all the correct steps of making sure that Advanta signed everything. Everything was in the name of the IRA. He actually, I believe, if memory serves me correct, had the check. They inadvertently wrote the check to him personally. He didn't deposit it. He sent it back, had to get it reissued. So following the steps, involving Advanta, involving your insurance agent is always going to kind of save you in the end, as opposed to just trying to do this stuff on your own. We're here to help your insurance agent. If you have a good one, is there to help you as well. So how coverage is written. Now, again, make sure that you're talking to your insurance agent, but in general, kind of the building blocks of making sure this is done correctly is that if you don't have an LLC or some type of intermediary entity within your IRA, making sure that your IRA insurance policy is written exactly how the named owner on the deed is written is the good rule of thumb. So in that case, if you are utilizing your IRA directly, Advanta IRA for benefit of client name, IRA account number should be the named insured on that homeowner's insurance policy. Now, this is a big issue that happens quite a bit, is that the insurance agencies will just have a character limit on the amount of information that can be put in there, and it's something that you can't really get around. So what we have seen and has worked to good effect is that if the insurance provider says, we'll put you personally as the primary named insured, but they allow you to name an additionally insured that has a higher character limit, and they can name the whole IRA, that can be a workaround for that. And I've seen policies get correctly paid out is that they say, hey, pay it to the primary insured, but just making sure that if they do that, that you're not trying to gain additional discounts. Sometimes using your credit score can get you a discount on things. Making sure that you're still keeping that arm's length from everything is incredibly important there. Or making sure that if you have, let's say you own a bunch of other properties personally, but by virtue of them putting your personal name as the primary insured, they're trying to extend to you discounts, which everyone wants to save money on insurance, to your IRA owned property by virtue of how much else you have personally insured. I would stay away from that. I could see that argument being made for that being an extension of personal credit to your IRA, which would be in violation of IRS regulations on self-benefiting from your IRA. So again, if they have character limits, which some of them do have, it's unfortunate, making sure that your IRA is fully titled as the additionally insured on that policy is, paramount. There really isn't too much else of a workaround if they, if they say that that's the issue. Making sure that the IRA is either the primary or the additionally insured in its full vesting is incredibly important. So that way you can at least show that, say, hey, the IRA owner of the property directly here is how payment should be issued out if there ever is some type of claim that has to be made on that policy. Now, paying for the insurance, another very important part about this, and one thing that can not only get you in can cause issues with the insurer, but also the IRS, is that any and all expenses related to an IRA-owned property have to be borne by the IRA. Meaning that if the IRA has property taxes, which all property pretty much does, has to be paid from by the IRA. If the property needs a new roof, not from a hurricane or something, the IRA has to pay for it. If the IRA property is carrying insurance, the premiums have to be paid by the IRA directly. You cannot pay those uh, premiums personally. You also can't pay deductibles personally. So any type of expense related to insurance has to be paid from by the IRA, and any discounts being offered need to be carefully examined before being applied for as well. So if your IRA owns several properties, yeah, apply for some discounts. See if they can give you some multiple insured property discounts, but don't use your own rental portfolio as the basis for applying for those types of discounts. So it's something that we cover pretty extensively here at Advanta by making sure people understand that if you have an expense, any kind of expense related to an IRA owned property has to be paid from by the IRA. Incredibly important here, because although it may not necessarily cause an issue with the insurer if they're so long as they're getting paid their premiums, if you were to have some type of issue where you were audited by the IRS and you were paying your own IRA insurance premiums, that could definitely cause an issue with the IRS. So running afoul of insurance companies or the IRS, not something anyone I think ever sets out to want to do, but make sure that, so long as you're following, or make sure you're following at least the general steps and basic guidelines, and you won't have to worry about running afoul of any of those things. So we're getting kind of close to the end here. So what are some do's and don'ts if you have a claim? It's not something you ever want to do, or sorry, it's not something you ever want to have happen. But if it does happen, what are some of the steps you can take, especially with an IRA-owned property, to make sure things is run as smoothly as possible? If a hurricane rolls through, having good established procedures is, it's going to make things easier. It's going to keep you from having to kind of think through things as much if you just have a plan in place. So what are some of the first things that you do, besides just, making sure everyone is safe? Contact your insurance agent immediately. They're some of the first people that need to be notified of this. Say, hey, let them know what's going on. They'll have some steps and procedures. They'll probably have some forms that need to be signed. Uh, you know, Again, taking pictures of the stuff of the property damage is also a good idea to keep for your records. Just kind of generally documenting the whole process is important, especially with insurance companies. Documentation paperwork is going to be key here. Then the second thing that I would recommend you do is contact your account manager at Advanta, so the person assigned to your account, and let them know that, hey, there's been damage into the property. I'm initiating the claim process. And then I would recommend that you copy your insurance agent, the person that you're coordinating with at your insurance provider, and your account manager at Advanta onto an email thread, so that way we can work with you to help make sure that any type of claim documents are properly titled in the name of the IRA, that they're properly signed by the IRA administrator. So one of the last things you want to have happen is get through a whole arduous claim process and then have the insurance provider come back and say, hey, this wasn't signed by the IRA custodian. It wasn't signed by the proper titled owner of the property. We got to start all over again. Again, kind of going back to the very beginning, don't let a small paperwork mistake cause you immeasurable headache and possibly cause you to lose your claim. Just involve us from the beginning. We're here to help and work, with you and for you through this kind of thing. So let us help. And we're only able to do that if you let us know and involve us in the process. So making sure that you submit any type of claim documents for us so that we can make sure that everything is properly titled in the name of the IRA, properly signed by us. And then also if there's anything that needs to be paid, like a deductible, if they're requiring payment of a deductible up front versus netting that out of any potential payment down the road, you can make sure that, all these small things that could potentially cause, the claim to come off the rails are, gotten ahead of and made sure that they don't happen. Some of the don'ts. Don't sign insurance claims forms personally. Even if they're asking you to do it personally, I would say, contact your agent, maybe if it's just like a general claim line. Make sure that you're keeping copies of your policy documents and just looking at everything and making sure that, if they do need you to personally sign something, maybe it's just like a privacy disclosure or something, that may be okay. But again, involving Advanta in the process to make sure that, if it's something that we really need to be signing, that we are, and that we can explain that to the insurance company. Again, if there's a deductible, make sure that we pay that you're not personally paying it. And a big one that I've seen happen quite often is that, for whatever reason, and one would think that this wouldn't be as big of an issue, but insurance companies will write checks to the name of the client personally a lot of the time, as opposed to the name of the named insured, be it the IRA or maybe the LLC. They'll just write it to the name of the manager of the LLC or something. And I've seen clients that have, I can't remember if he actually had to give up the claim, but he ran into huge issues because he personally deposited an insurance claim check, a very substantial one. We couldn't accept payment into the IRA for it. He had to end up working with the insurance company to try to return that payment and have it reissued. So, again, the overarching thing here is that if you have a claim, obviously make sure everyone's safe, notify the insurance company, notify Advanta as well, so that way we can be involved in the process from the very beginning, because these claims processes can be extremely long and drawn out. And the last thing you want to do is kind of go through all that work, all that headache, all that heartbreak, just to be told that you have to start over again. And I've seen that happen. I have seen something as simple as the wrong person signing something in the very beginning of a claims process, have to make the whole thing start over again. And, you could be looking at months, if not possibly years, of arguing with insurance companies in order to get something paid out. So, again, making sure that we're involved, as like, the immediately second person, once you've kind of made sure everything is safe and contacted your insurance agent, is very important. So that's pretty much it for what I have for you today. Unfortunately, I can't get, since I'm, not an insurance advisor, I can't get too far into some like specifics about what it looks like for each individual property or individual states. But again, I encourage you to contact us if you have questions about the policy that may be currently held by your IRA, especially if you want to change something, involving us in the process of having something change or having an insurance binder updated, and involving us with the process of talking to your agent will make things incredibly run much more smoothly. Uh, with that said, I want to hope that everyone has a great Memorial Day weekend coming into this hurricane season. I hope everyone stays safe. That if you are in a hurricane-prone area, that you are missed by any storms, and I hope that that the entire United States gets missed. As well, hopefully no one, I shouldn't say just us, and the world doesn't have to deal with these things. But unfortunately, we do live in an area on the eastern seaboard and Gulf Coast that do have these issues. So, we're here to help. If you'd like the slides, they are attached to the presentation as a handout. I'll stick around for a little bit if there's any other additional questions. Again, we're here to help. And thank you very much for joining me today. I enjoyed presenting, so thank you.